The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What is up, Octo Nation? It's Charlie. I'm going to be your host for today. There are a ton of ways to win in the SPAC market. You can beat them with the basics, you can blindside them with the trick plays, or you can do a combination of both. The options are up to you. There's so many ways to play it. We're going to go over some real life examples that I think are going to bring to light a lot of real ways to get this job done, all right, by multiplying our money. There's a user on that Discord I keep telling y'all about named Feels Good. And he said something real simple that I just loved. And he said, SPACs have changed the way I look at $10. Okay. You might have $10 and think, how am I going to spend this? We're going to go to the grocery store and buy this or that or whatever. You know what? I'm going to put it into SPACs. I think that would make a great t-shirt. What do you think? All right, let's move on. Here are some real life examples. I wanted to use IPOB.U as a ticker. We're going to go over how a lot of folks move these units and what to do with them. This actually comes with 1 common and 1/3 of a warrant. The purchase price that I bought these at was on June 12th, 2020 at $11.01. The current price is $13.05. Okay. That is an 18.53% increase in just 35 days. Not bad, huh? If you bought $1,000 worth of it at the beginning, that's a profit of $185.30. A total worth of shares at $1,185.30. Now, you can let that ride, or you can take those units and break them up. So then you get commons, and then you also get warrants with that. Okay? Now let's take a look. What the $1,000 would give us is 90.82 total units. We're going to round that to 91 to just try to keep this as simple as possible. The 91 commons, which are now worth $12. The 91 common shares are currently 91 common shares times $12 is $1,092. 91 units times 0.33 or 1/3 of a warrant is going to give us 30 warrants total, right? Because we have 91 units. We're trying to figure out how many warrants we're going to get after we split, okay? Now, at the current warrant price at $3.84, we're going to times that times the 30 warrants, which is going to give us $115.20. So if we take the 1,092 plus the warrants at $115.20, that gives us $1,207.20, or a 20.72 increase. All right. At this point, you can either keep both of the commons or the warrants that you now hold, and you can keep one, or you could sell one and just hold one, or you can keep them both for the long run because you totally believe in the company and whatever, you just want to ride them and figure it out later, fine. Or you can sell both, okay, and just be happy with the green and just move on to the next one because you did pretty darn good in about a month, okay? Or what some folks like to do is sell the commons and keep the warrants. So they're going to take the commons, just sell them, dump them off. They're going to keep the warrants for the long haul and just see what happens, all right? This is their now gamble, all right? Keep in mind you only have 30 warrants. And even if the price goes 2x, you still only have $230.40 currently in warrants. The cool thing is this is all pure profit play, like free money, which is writing. A lot of people look at it like when they buy the units just so they can get the warrants for free. So they'll put up the money for the units. They'll wait about 3 months until the warrants and the commons become available, and they'll instantly split them. And the second they're split, they instantly just sell the commons and just let the warrants ride through because they look at it as free money just kind of hanging out there. Sometimes it doesn't equate to a lot though, and that's my problem. Which is writing. If the target LOI end up being something big, this could get bigger and better. So including in this method are your warrants have 2x'd, you would add back your profit from the commons of $92 and you would end up with $322.40 gain, or a 32.24% increase on your money. Now, that might seem like a lot of work, and again, this is if the warrants now have 2x'd where they're at. Okay, seems like a lot, right? That's what I think. But I mean, look at where you were already at the just keeping the units. You were already at 18.53%. You could just take all that and move on, or again, you could just let it ride and just hope that they find a rat LOI, and then you're up another 12%. So there's that to keep in mind. And then maybe what if it 4x? Just keeps going from there. You never know. It could be a really awesome one and go 10x. All right. Yeah, but what if you bought the units within a couple days of being released? So this example was IPOB-U, which I had bought. Let me show you. I use the gold as when I buy, right? I bought here, and this example was for when I had bought, okay? From where I had bought to where it is now. Now, look at where you could have bought. See, I got in $11 almost exactly. If you would have got this in the first week this was out, it was right around like $10.20, $10.18, $10.15, $10.22. Let's do the math if you were to bought all the way back then. Let's see how big of a difference that makes, okay? So you got $1,000 in your purse. You divide that by $10.20, which is your buy. Okay, we'll just say we bought it for $10.20 instead of 11 like I did. That's going to give you 98 units instead of the 90. And we're going to times that by the current unit price if we just let it chill and just ride. So the current unit price is at $13.05. You'd be sitting at a purse now of $1,278.90, a 27.89% increase on your money, or a $278.09 gain in around 80 days. Okay, because I bought about a month and a half, 2 months after it had been released. The units had been released, but if you got in that ground floor and were patient, and you can even start stacking these. Just be patient. Just buy them the second they come out. Forget about it. Next one comes out, buy the unit, and down the line. But before you know it, these ones way back on the line, all of a sudden you're going to be looking at your tickers and be like, wow, this one, I'm up like 50%. I'm up, look at this green. And then you're going to look at it and be like, what is this even about? And then that's how you do it, okay? That's how you can check out how the big boys make money. This ticker that we're talking about is not normal. So why didn't I use a realistic SPAC to do this with? Please keep in mind that this example was a unicorn SPAC, or one that's overly parabolic because of the management / the size of the big purses behind it. I wanted to give a bigger / best green example I could find. Most warrants, once released, are going to start around $1, not $4 like they are now. Could be 50 cents, could be $2.25. Mainly depends on the purse, okay? How they kind of start, they usually like to ride around. But getting to $3.84 with no potential LOI is nuts, crazy. And most units, let's just say, will stay around $10.50. So if we had a $1,000 purse and we bought the units at $10.50, the average unit early buy price, after we split it with warrants at $1, we are going to get 30 shares, 30 warrant shares that are going to be worth $30. With $30. The commons that we'll get 95 commons. Those will be worth $1,000. So where would we end up? We'd end up at $1,030, which is a 3% increase in X amount of time. That could take, like it's about 3 months is usually the average. So, about a $30 gain or 3% gain. All of these numbers move around a lot, but generally this is what you will most likely see for quite some time. Many look at buying units at the beginning so they can split them and just sell the commons right away and move to the next one, like we were talking about earlier, and then just let the warrants ride for free, which is a solid safety strategy. But even if the warrants 4x'd, which is great, you are still holding only $120 in this example, okay? So, I think the deal is if you're going to get into buy a warrant, personally at least, there's just not enough potential gain that's going to happen fast enough on most of these. Now, if it is a unicorn, let's start branding a unicorn, okay? If it's a monster one that's coming out, like PSTH one, you might want to get the units because they do go pretty parabolic almost right away, like this iPop example where it's already sitting at $4 for the warrants, okay? Then it kind of starts looking a lot more realistic to make sense, to me at least. But most of the time, if they're like the normal ones that come out right out the gate and only charging, because there's a lot of warrants that come out after the units come out. 3 months later, the warrants come out, they're only riding around like 50 cents. Or they'll come out at like 70 cents, they'll go down to like 45 cents, and they'll stay there for like 3 months. Can you imagine you'd have in this situation with $1,000, you'd have like $20, $30 sitting there. Like, what's the point? Okay. Even if it 4X is $100, all right. It's good if you're starting, but I don't know I'd go that route if you're trying, you're starting with small money. I just don't see it. Yeah. I think for most of them, the strategy that makes a lot more sense to me is to buy a percentage of commons and a percentage of warrants when they come out. The percentage is going to vary on your risk schedule and what your purse and life can handle, okay? I would personally rather go way heavy on the warrants and lower on the commons just to have them and, kind of have some safety. But, again, I don't invest in sketchy companies, and I don't like sketchy management. And, if it's a company that I don't think, even if I got stuck bag holding the company and I didn't feel good about it, I'm not going to buy it no matter what, okay? So that's why I only talk about certain types and avenues of SPACs. There's some avenues some people bring up and they're like, why don't you take a look at this? And I look it up, and it's because it's not something that I think is sustainable in not only a current market, but the coming market, okay? Like, for instance, if a company ends up buying Airbnb, that's not the place I want to be investing in the next couple of years. Or if I get stuck bag holding a bunch of Airbnb shares, I am not going to be happy, okay? If you don't believe me, look what happened to vacation rentals in 2008, 2009, 2010. Then let me know what you think, all right? So keep in mind, this was based off a third of the units, or third of warrants. Some units do come with a quarter of a warrant, some come with a half, like the fuse.u that we talked about. I did a video yesterday, was it? Maybe Friday? Yeah, Friday, Saturday, I don't know. We'll find it. It's a good video. I think that's a great company. Fuse.u, they come with a half, and I really like that. So that changes things drastically also. But what if you put $10,000 in and the warrants went 4x multiplier? So you had 10 times 24, the writing free warrants that you had. That would equal $240. Times 4x multiplier though, you could be at 960. Right? But but still, even if you had the $10,000 in and you split those, a normal unit situation, you split them, you're still only going to end up with $240 on normal warrants for a long time. There's not enough, for taking $10,000 and holding that in something for even 3 months just to get $240 out of something, I don't think many financial advisors would look at that as anything good to do. That's just, it doesn't make any sense. So again, even if that warrant, say the warrant came out at 50 cents, right? And eventually 6 months or a year later now, it 4x to $2. So now that 50-cent warrant is now worth $2. That's where that $10,000 initial investment a year and a half ago is now worth $960. That's still money though. This is still better numbers than most portfolio managers get for their clients. So, but to me, I look at this, I'm like, what? I don't know about that. It doesn't sound good at all. But manage your risk. This is free money writing basically. So it's it's probably good to have a mixture of kind of all of them. So, but what if you just waited for the warrants to come out and bought on opening day instead of messing with the units? Okay, I like this one a lot better personally. So what if you just said, forget the units, you just waited for the warrants to come out and you took your heavy cash and just threw it in then? Okay, and again, only do this to your top 5 maybe companies that you think are like, dude, I love the subject they're going after. I love the team. They have a proven record. They've got a big old bank account. They're going to go after something totally rad. Okay, those might be ones, the unicorns. Okay, if you did this to the unicorns, this is probably going to be the safest time to do something like this, because this is more risky. Say you had $1,000 cash again, and you're going to invest it, and you bought those iPod warrants right away at $3.50 per warrant. That is going to give you 285, let's call it 286 warrants you could have bought at opening day. Now let's round that to 286. And by the way, your broker will not round your warrants up, okay? If you have 10 and a quarter warrants and you're saying, I want to redeem those for something, or however they're going to do it, they're never going to do it. They're never going to give you a quarter and round it anywhere other than down. So keep that in mind. You always want to get a number divisible by numbers. So if you get a quarter, you always want to be divisible by 4, right? If you get the units and it comes with a half of a warrant, you want to get divisible by 2. That way, no matter what, you get your full warrants, okay? So 286 warrants times $3.84, which is the current price of the iPod. That's going to give you $1,098.24 current worth in 27 days that the warrants have been out, or a 9.82% gain in 27 days on your money. So again, warrants coming out at $3.50 is not typical, but when you're doing it this way, it doesn't, regardless, it doesn't really matter how you're playing that, because a 9.82% gain on a warrant in the first 27 days is totally common, no matter what it comes out at. So even if it comes out at 50 cents, it'll spike around way more than that. Sometimes it'll come out at 45 cents and jump up to 75. The next day it go down to 65. But we're talking 20, 30, 40, 60% jumps. I've been talking about a couple to day trade, like in my video yesterday, and I've been talking about it for 2 weeks, like SOAC and stuff, and ANDA, SOAC. Those things have been spiking around like 60% a day almost for weeks. Okay? So pay attention to that. But what if the warrants 2x'd, in the same situation? You will have $2,000 total, which is $1,000 in profit, or 100% increase on your money. Again, this is risky, and this could end up at 0 if no deal is made. But a lot of times, just go look at historical graphs of look at all the, not all, but just look at like 5 random SPACs that are already trading really high, or everyone knows about, Go look at where they started with the warrants, and go look at, 6 months from when they started, 3 months. Just look at the chart and look at the percent they went up. Okay, you'll start pay attention to the graphs and you'll start learning a lot. Okay, so a good example I just brought up too, and right away I brought up a chart on SOAC, SOAC, like I was talking about, and DMYT. In less than 1 month, they 2x'd from being released. Again, not common, but it does happen. I love DMYT. This one is a going after mobile platforms. They're talking about apps and stuff, and the guys are known in the app business and all that. I bought almost right away, and I think how did I play this one? Let's find out. DMYT. Warrants. Yeah, no, I didn't buy this one right away. But anyways, take a look at this, right? This was out for the beginning of June, and once it hit like July 1st, when it was first coming out, it was like 87 cents. But it took it 1 month, and then all of a sudden, look what happened. It went from 85 cents all the way up to $1.52. 2 extra money, okay, in a month. So again, if I would have known about this and doing my due diligence before, I would have bought in earlier. I think I might have on this one. I think what I did on this was I was trying to just do that catch thing that I do, where I'll put in a buy to try to catch the big spikes up. So that's another way to play these, is you want to catch the parabolic spike. So you only want to invest if it's going to go crazy. I know people that even they'll put in buys like over 250 to catch it going to 4, because most of the time they'll, if there's decent talk about something, it'll get to about 2 and hang out, consolidate. But once it gets to 250, it usually doesn't break. But if it goes past 250, it's usually going to 4. Okay, so they're trying to catch it on the way to 4, and then they're going to wait till it gets 4, and then boom, pull out, and they double their money. Then they can double their money overnight. So that's another way to play it. Now let's look at SOAC real quick, the other one I was talking about, the warrants. Okay, this is one I was thinking about that I bought. I put a buy in right above because it dipped, and I was like, dude, it's at 80 cents. I put in a buy at 87, and sure enough, that's what happened. Look at this green candle. It grabbed it on the way up, so bam. And this doubled me money overnight almost. Okay? How crazy is that? This actually went all the way to $1.75. But again, boom, came back down, consolidated. But look how new this is. This is June 30th to July 10th. This was 10 days after the warrants released. This is the ultimate green SPAC. So I was like, of course, hype train, I'm going to follow the river. Jumped in, put my buy order, so watch these. All right, that is it for this video. I'm not going to end up making another video tonight, but I want to just let you know, 2 I'm going to be buying tomorrow are NPA. If you haven't seen my video on them, it is my least watched video. And I thought I actually bought them, but I got greedy and put in a buy below, and then it's been kind of going slightly above it. So I just need to get into that one. It's a soda and garden burger. So that's a good one. And then there's also another correlation with my favorite thing about it, which is Red Bull. It's got the ex-CEO of Red Bull, the guy who actually made them really cool. All right. So check that video out. I'm going to be finally picking them up tomorrow. And then PIC, I did a video about them yesterday. I'm picking them up tomorrow too. I'm also going to keep my eyes on PSTH, possibly TRNE. I don't necessarily like this one, but it's getting slightly hypey, so I might jump in, and probably not though. We'll find out. Any more questions or comments that y'all might have? If I totally confused everyone, I get it. Numbers is hard to just kind of go over. I'm putting this on my site though, so a lot of times it's easier just to get it in front of you and just kind of follow along and try to do the math yourself with it. If you have any more questions, I'll just put them down in the comments. Any plays you want me to take a look at, put them down in the comments also. And thanks again for all the support. We're still flying up, all right? But make sure and subscribe if you haven't, and we'll keep sticking around and keep pumping these videos out as fast as I can, okay? I still got 4 other videos I'm juggling right now, trying to complete and do the rest of the infographing on and all that. So thanks again, guys, and y'all have a good rest of the weekend.